Hello everybody. This video explains bad debts and provision for bad debts. What is bad debts expense? Companies incur bad debts when customers cannot settle the debts they owe to the companies because of bankruptcy, closed down, or other problems. Bad debt expense is tax deductible. Example: debtor ABC Limited has owed Star Company $1,200 since 2015. This is debtor ABC Limited account. Balance brought forward $1,200. In year 2020, ABC Limited declared bankruptcy. Star Company decided to write off the outstanding amount of ABC Limited as bad debt. According to Golden Rule, increase of expenses should be recorded on the debit side. The journal entry is debit bad debts $1,200. Credit debtor ABC Limited $1,200. Bad debts expense is transferred to profit and loss account at year-end. What is provision for bad debts or provision for doubtful debts? It is the estimated amount of debts uncollectible assessed by the financial management at financial year-end based on past experience, current business and economic situations. The purpose of this provision is to comply with the prudence concept that any possible loss should be provided. It helps to show the real value of debtors as at the balance sheet date. Any provision for bad debts is not tax deductible. Example: Gold Company has commenced its trading business since 1st January 2015. Gold Company offers 3 months credit to its wholesale customers. Gold Company has adopted a prudent accounting policy of bad debts provision based on 2% of total debtors at year-end. At end of 2015, total debtors amount $150,000. Bad debts $1,000. The calculation of provision for bad debts is 2% times $150,000 equal to $3,000. The journal entry is debit provision for bad debts profit and loss account $3,000 as expense. Credit provision for bad debts balance sheet account $3,000. Provision for bad debts expense is transferred to profit and loss account. Provision for bad debts balance sheet account balance $3,000 is carried forward. This is the profit and loss account for year-end 2015 extract. Under operating expenses, bad debts expense $1,000. Provision for bad debts expense $3,000. This is balance sheet extract as at end of 2015. Total debtors $150,000. Less provision for bad debts $3,000. The estimated collectible amount from debtors at end of 2015 is 147,000. Alternative journal entry: debit profit and loss account 3,000 for the provision for bad debts expense, without creating a provision for bad debts profit and loss account. Credit provision for bad debts balance sheet account 3,000. It is recommended for companies to create a provision for bad debt profit and loss account to record bad debts provision journal entry. At end of 2016, total debtors amount 165,000. Bad debts 840. The calculation of provision for bad debts is 2% times 165,000 equal to 3,300. The provision for bad debts balance sheet account balance brought forward is 3,000. So, increased provision for bad debts 300 is required to comply with the accounting policy. The journal is debit provision for bad debts profit and loss account 300 as expense. Credit provision for bad debts balance sheet account 300. The increased provision for bad debts expense is transferred to profit and loss account. Provision for bad debts balance sheet account balance 3,300 is carried forward. This is the profit and loss account extract for year-end 2016. Under operating expenses, bad debt expense 840. Increased provision for bad debts 300. This is the balance sheet extract at end of 2016. Debtors 165,000. Less provision for bad debts 3,300. The estimated collectible amount from debtors at end of 2016 is 161,700. Alternative journal entry: debit profit and loss account 300 for the increased provision for bad debts expense. Credit provision for bad debts balance sheet account 300. At end of 2017, total debtors amount 143,000. Bad debts 600. The calculation of provision for bad debts is 2% times 143,000 equal to 2,860. The provision for bad debts balance sheet account balance is 3,300. That means there is excess provision for bad debts. The journal entry for decreased provision for bad debts is debit provision for bad debts balance sheet account 440. Credit provision for bad debts profit and loss account 440 as other income. Decreased provision for bad debts expense is transferred to profit and loss account as other income. Provision for bad debts balance sheet account balance 2,860 is carried forward. This is the profit and loss account extract for year-end 2017. Under other income, decreased provision for bad debts 440. Under operating expenses, bad debts expense 600. This is the balance sheet extract at end of 2017. Debtors 143,000. Less provision for bad debts 2,860. The estimated collectible amount from debtors at end of 2017 is 140,140. Alternative journal entry: debit provision for bad debts, balance sheet account 440. Credit profit and loss account 440 for the decreased provision for bad debts. Hope you guys understand bad debts and provision for bad debts. Thanks for watching.